Okay, Assalamu alaikum. So what are you all expecting? An easy ride? No questions asked? All my sessions are interactive. I've actually forgotten one of my prompts, which is a shame. Well, will be a relief for you guys. It's called the Frisbee of Destiny. It basically gets chucked out into the audience when nobody decides to perk up. And the twist is, it's not who catches it that has to answer, it's the person next to you. So you should try and grab it. But I think I'll get familiar with most of the faces, so I'll pick on everyone. Okay, just a little correction to the introduction. Who I am and what I'm doing. As a job, if you like, I'm the director of Simply Sharia. We're a wealth management organisation that specialise in Sharia-compliant investments. We established ourselves about 4 months ago. We're the only organisation of our type in the UK and I think across Europe as well. But in terms of who's organised this, that's the First Ethical Charitable Trust, which is very charitable, and whose remit includes looking to educate undergraduates and actually various levels of society about alternative forms of finance. So it's a kind of an opportune time to do that. This is something we've been talking about for a number of years, pre-credit crunch as well. It just happens to be at the moment that a lot more people and a wider audience are interested in hearing about this. Okay. Who agrees with the title? No one's hands working? Few people. Okay, who doesn't agree? Okay. Yeah, I got that.
Yeah.
The lady at the back for both of them. If you're like that for one, you're going to be like that for the other as well. Okay, let's have a quick recap. Okay, so we're going to go back into the credit crunch. This is a much, much longer presentation than we have time for today, because unfortunately I have to catch a train a little bit later. But can somebody give me a definition of the credit crunch?
When the banks stop lending,
Not a bad start.
when the banks stop lending, and people feel the crunch of not getting legal aid off from loans.
Okay, some of the effects of the credit crunch. Yeah, anybody else? Any medical students? How many medical students do we have? Come on, hands up. Okay. Right. Anybody else?
There's no money in the country.
No money in the country. Your name is?
Ahmed?
Ahmed. Yeah. I've heard you talking about this stuff before, so you know the answer to this.
What is price work? I think it's like when banks involved in loans and interest loans and people can't pay back their interest, and that will shortage the liquidity in the banks and they become out of cash.
Okay. Sudden reduction in the availability of commercial credit, which occurred around June 2007, which is the bank that highlighted this to the rest of the world. Sorry? No, this one wasn't Lehman Brothers. It was a French bank.
BNP Paribas.
Yeah, BNP Paribas. It was off the back of a financial advisory firm in the US filing for bankruptcy called New Century, and they specialize in selling mortgages to people who couldn't afford it. So they did go bankrupt, and then Paribas realized that there was something big going on. So what we'll do is we'll have a very quick recap of exactly what the credit crunch is. I know this is a bit old hat, and we've kind of been through this kind of thing before, but it makes interesting viewing anyway. Okay, so we had initial growth. We had banks offering credit to people who couldn't afford to pay it back. Unethical? Unethical?
Yes.
What you had is that, you see, when you sell a mortgage, it's actually, it has a value, it has a commercial value. So when you package a whole lot of them together, then you have something which is an investment, so for say a foreign investment company. Now if you're a pension fund or a foreign investment company, are you going to look to get a stake in one of the leading economy in the world, which is America? Yeah, still. So that's what CEOs are. Collateral collateralized debt obligations. Yeah, the industry's full of that kind of jargon. It simply means a whole load of contracts put together and sold out. Okay? So we then entered into the subprime problems. Okay? It became obvious that these particular products had been packaged in a way which was where they were misrepresented. And that simply meant that these rating agencies, they didn't really investigate the nature of these subprime contracts, and so gave them a very high status, which meant that these investments had a very high status, which meant that the whole world came in and bought a portion of the American mortgage market. Okay, and then this had a global effect. Okay, so you can see the epicenter, the axis of evil over there, the USA. Okay, when it comes to finance. Anyway. And it rippled out to all of these major economies. Obviously the UK, very tightly aligned with the States, France, Netherlands, Germany, Belgium, and of course Australia. So then we had the first slap in the face to free market capitalism. What was that slap in the face? Bailout. Which would mean, why is that not within the spirit of free market capitalism?
If you want to allow banks to compete with each other and by supporting the bank is creating a shared monopoly between several banks.
Yeah, I mean, can you think of any other business where the government would come in to save? It's because finance is critical, isn't it? Financial institutions, they're too big to fail. Everybody's heard that before, right? And it's actually true, and so that's why the bailouts happened. If the bailouts didn't happen, it would have been even more chaos than what's happened. So US banks came in, we had a liquidity crisis, which basically means there was no money, and we had banks in turmoil. Everybody remember the run on Northern Rock? Yeah? Why was there a run on Northern Rock and not on, say, Barclays or Lloyds or RBS? Smaller? What caused the crisis? Mortgages, right? Okay, Northern Rock, its main portfolio was made up of mortgages. So there was a run on that bank. Everybody know what a run on a bank is? Come on, let's have some honesty. No?
No.
Okay. Basically means that everybody's trying to get their money out at the same time. Yeah? And the fact is, if that happens, then that could be disastrous for the bank, because the bank is based upon the money it has in its vault and being able to lend that out. If it has no money, then it has no business. And the same thing happened in the States. You had Bear Stearns, a huge bank. Huge bank. Again, the government came in. And we had a US bailout. It's a rather complicated way of doing things, but basically the US government goes out to the international money markets and gets a whole load of money in order to flood the banking system, in order to loosen everything up. The problem is that the banks are sitting on a lot of toxic assets. They don't really know what's good and what's bad. So they want to step back now. It doesn't matter how much money the government's offering, and just work out where they're at, which is a problem, because the government's actually putting money into the system, but the banks themselves are saying, you know, we're going to hold tight for the moment. So that continued for a while. And in the UK, similar thing happened, slightly more complicated. And then we had different countries starting to panic and behave in different ways. In Iceland, pretty much everything was nationalized. That means the government came in and pretty much bought a lot of businesses, the entire banking system, to ensure it didn't fail. And that's because Iceland was the pinnacle of free market capitalism before the credit crunch. And now it's at the bottom end. It's considered a real disaster story. I mean, to give you an example, back about a year ago, McDonald's left Iceland. You know, McDonald's leaving anywhere. Anywhere. But they actually left because people couldn't afford to buy Big Macs anymore. Very interesting. Then you had splits in constitutions, such as European Constitution, European Union. So Ireland were the first ones to do this. You know, the kind of the culture of me rather than the culture of we. So the European Union is supposed not to cross, countries are not supposed to cross any boundaries in relation to particular agreements they have. But what Ireland said is, we're going to guarantee bank deposits to the tune of 100%. Why is that a problem for other European countries?
They will get cash.
Sorry?
They They will get more investment in the island.
Yeah.
They don't get cash.
Yeah, sorry. Yeah, that's true, yes.
People would, countries which wouldn't guarantee 100%, or they would have a flux of money coming into that country.
Yeah, that's pretty much correct. What's going to happen is that people are going to start taking their money and putting it in Ireland. Wouldn't you do that?
100%.
It's 100% guarantee, right? Well, then that destabilizes economies around Europe. So you're not supposed to do that. But Ireland thought, what the hell? Yeah, it's time to take the money and run. Okay? And then they were criticized heavily by Merkel in Germany and Sarkozy in France. That's before they decided to do the same thing. So the cracks were appearing politically as well. Very interesting. We've seen the problems in Greece, the austerity measures that have had to come in there in order to get them out of debt, the fact that speculators are basically driving Greece further and further into recession. It's really quite a tragic story. And then you had Australia. There are different things people are trying to do here in order to get the system back on track. But there was a question they weren't all asking, which forms the crux of this, really. Stock markets were down. Can anybody answer that? Reykjavik?
Yeah.
Anybody else?
No, it's like Sunday.
Try and think laterally. Come on. Nobody's looking. There you go. You got the joke? So obviously it's been the butt of many jokes. And we can actually, this is a clip from The Guardian, and this chap we want to see. Okay, so how the bank's doing, this is a slightly old slide. Does anybody know how the banks are doing? They're doing pretty well, actually. HSBC announced its profits of about 12 billion, about a month ago. RBS, who owns RBS? A large proportion is owned by the government. They're still in debt. They had, I think their accounts showed minus 24 billion 2 years ago. But then that went down to about 10 billion following year. And this year they're about even, which either tells you that banks have done a really good job since the credit crunch, or that banking's money for old rope. And it's pretty easy to make money in the banking system. Barclays, they're all profitable. Barclays are doing well. They're about 6 billion profit. I find the UK Uncut thing quite funny. Where they're anybody here part of UK Uncut? No activists here. Everybody heard of UK Uncut? Really? Okay. What's happened to activism among students? It's all cafe lattes and posh kebabs. UK Uncut is an organisation that wants to make the banks pay for the cuts that society has been hit with, or at least highlight the issue. So they take over stores. Well, most recently they took over Barclays and they turned it into a library. Because the libraries have gone, right? They're being shut down. So they turned it into a library. They turned another branch into a theatre as well, because the funding for theatres has been cut because of the credit crisis. Yeah, you guys should have a look at this.
Did they announce they're going to pay yearly?
Sounds like great fun. Sorry.
Did they announce they're going to pay yearly, like 8 billion, like for the next 4 years?
Yeah, we'll get onto banking reforms in a second. That's a separate presentation, actually. Okay. Anyway, forget all of that. That's all pretty straightforward. Who's to blame? Let's go one by one. Alan Greenspan. That was the most powerful chap in the world at some point.
That's why the problem is there. They've been putting money.
He was the head of the Federal Reserve in the United States, basically head of the bank that lends other banks money, and he adjusts interest rates. And basically, he's a fundamentalist. It's nice to call somebody else a fundamentalist. He's a fundamentalist, free market. Yes, sir.
I think that the whole situation with blaming banks and blaming bankers and so on is pretty much like Islam. the media focuses in one section
Mm.
and they look at all the bad things about that sector
Mm.
or religion, and then they'll all say, oh, Islam is bad, oh, look what happened. And then everybody is reporting and saying Islam is bad, Islam is bad. With bankers, it's the same thing. They look at, oh, look, they created the recession. Did they create the recession? Is there a single person to blame? Or is it just one factor, which is greed?
Right. Very, very interesting point. Everyone articulated, I tend to agree with. We'll work our way around who's to blame. There's quite a few people that we can pick on. So Alan Greenspan, so quite simply, he then gives banks lots of money on the cheap. Right, what's going to happen if you give, this is about greed, right? Yeah. What's going to happen if you give a banking executive money? What's their job? To make more money, right? And simply to act within the rules. Okay? So banks, being quite powerful, have traditionally lobbied for rule changes which deregulate markets. Nothing illegal about that. They're simply serving their shareholders. That's their responsibility. So is it any surprise when you give a banker a pile of money that they're going to find a way to make more money off the back of it? Have any banking executives been jailed? I think there might be one. Yeah, he's more of a, he did a Ponzi scheme, didn't he? No, and the reason is that it's very difficult to prove their individual guilt on this because they did work within the rules to an extent. It was unethical, but it was basically greed, legal greed. Okay, clever bankers. Okay, so these are the guys that come to this kind of university. Who's doing maths? Yes, the banker of the future. And the better you are at maths, the better you are at concocting financial products which make no sense to anybody. And then taking it to a bank and saying, look, if you put 20 billion into this, it will make 0.0001% guaranteed. And so that's the kind of things that clever bankers do. A lot of these instruments people don't understand. I don't understand. And I'm in the industry. A lot of experts don't understand these. I think George Soros even said that, which is saying something. But most people associate the problem with greedy bankers. You know, the kinds who sit in front of the desperate couple with their children in the Midwest or Detroit, somewhere where industry has collapsed and there's no jobs. And they say, look, just sign here and we'll give you the money. Yeah? Self-certification. Everyone understand what self-certification is? Yeah, it's when you tell the bank how much you can afford and the bank believes you. That's self-certification. It's not the bank's responsibility, it's yours. So greedy bankers would just play on that. They'd say, right, okay, can you afford it? You'd say, well, yes. They'd say, fine, sign here, you'd get the money. And a whole load of those people were the subprime market. Bill Clinton. You guys old enough to know who Bill Clinton is? Why would he be to blame?
Steve Lax, 1999.
He basically, he deregulated the market to an extent. I'm not going to get technical with this at all. Yeah? There's a system of money creation that's at play in banking, yeah? Where a bank has a certain amount of money and then it's able to print a multiple of that money. Fictitious money. It's legally allowed to do that. Does that make sense? Like when you put £10 in the bank can basically print off or loan out 10 times that amount, 20 times that amount, maybe 30 times that amount. Literally out of thin air. Now that's called the asset debt ratio. Okay? If you look at economic theory, that's 1 to 10, but Bill Clinton, during his time, it went up and up and up, and it ended up at the point of the credit crunch of being maybe 1 to 40. So £39 or dollars out of every 40 was fictitious. There was one real pound in circulation. I can see I'm losing it. We should move this on. Regulators. Isn't it their fault? People should be regulated better. What do you think? Regulation? No, because laissez-faire capitalism requires that a competitive marketplace is established, and therefore you need the law in order to stop market abuses. So the law needs to balance off. This is the difference between a conservative approach and the approach, say, Labour or the Lib Dems. Labour Lib Dems would be all about a high level of regulation, whereas the Conservatives, it's all about big business, right? So they're looking to deregulate it in order to favour business communities. Sorry, I'm just going to rush through this here, and then we'll do the question and answer. Apologies. Okay, Adam Smith. Who's Adam Smith? Yeah? Father of economics. Lived about 250, 300 years ago. Wrote The Wealth of Nations. 900-page book. Thoroughly recommend it. A bit difficult to turn the parchments though. He basically is the father of the modern day economic system. But he's not really to blame. He wasn't really to foresee the way his system would be abused. The World Trade Organization. Perhaps they're backing big business too much, facilitating trade and finance. The corporate body, limited companies. Perhaps they're skewing the market as well. Estate agents? Should we blame estate agents? It would be nice to blame estate agents. Satan? Who blames Satan? No, sorry, no, it's not that kind of talk. Finally, a more serious point, you and I. Okay, how many of you are married? Don't blush. Just one, two? Anybody else? Three? Inshallah. University's the best place. Okay. Put yourself in a position now. Actually, let me ask this question first. Who blames the people who actually said that they could afford it? Was that the right thing to do? These mortgages? Desperation, yeah, kind of preempted that. Think about it. If you're a couple, you live in a bad area and you've got a kid on the way, for example, and there's not really much going on in the way of jobs, you want to move to a better area. Now, everyone else, it's a bit like herd mentality. Yeah? You can have your own principles, and actually university is good for being idealistic, so enjoy it while it lasts. Yeah? When you join the real world, those will go out the window. Yeah? When financial pressures are there. And so everybody around you is up sticks and moving, and the kids are getting educated in better areas, and you're having to deal with drug pushers and the off license on the corner, etc. If somebody comes to you and says, "Here's some money to move into one of these nicer areas with the best schools," and it's not semi-detached, it's detached, and it's got a much larger garden, would you not take the money? Well, back then at the credit crunch, it wasn't difficult, but everybody was doing it. So I can't really see how you can blame people. But ultimately, there's a question that people are not asking. It's taken us a little while to get here, but we're here now. The system. These little things that we've just talked about here are symptoms. They're things that perhaps can explain what's happened. But what really isn't being challenged is the underlying system itself. And what is that system? Laissez-faire capitalism. Translation of laissez-faire? Free market.
Let that be.
It means that, but let it be. Yeah? Let it be capitalism. Because Adam Smith spoke about the invisible hand that regulates the market. Yeah? That things, supply and demand kind of balances itself out. And these are the fundamental kind of core components of capitalism. This is a system that you live in, so it'd be good to know about it. It assumes that we all have reason, to an extent. I'm sure there are exceptions to that rule. That we all base our lives upon the same reality and the same physical and structural constraints. That we all are driven by self-interest. Are we all driven by self-interest? I didn't say selfish interest, self-interest. And it was argued that this is a system upon which to base a cohesive society. Yeah? Where people don't expect something of somebody else. They take responsibility for their own lives, and people interact with one another in order to get on and to get by. I don't see anything particularly wrong with that. And that's the law is what enshrines that to avoid the market abuses. Okay, so this is the system that we live in. So why don't we just analyze this for a second and see whether or not we can identify any cracks in it. So what is the modern machinery of capitalism? regulation. Obviously, you need regulation, like I mentioned a couple of times, in order to avoid market abuses. Your corporate structure. Okay. Limited companies came about maybe 150, 175 years ago. Why were limited companies invented? Why were they introduced? Companies, the company structure. Yes, sir.
To raise more capital, expand.
Yeah. I've just given you each. I assume you're all in debt. I've given you all £20,000. Now, somebody's approached you with a venture and said, put your £20,000 into this. It's much safer for you to do it. Well, prior to the creation of the corporate structure, it would be risky for you to do that because you may open yourself up to personal liabilities of the business beyond the money that you put into it. So there was a lot of market abuse going on there. So a structure needed to be created which would protect you, the investor, and encourage the masses to pool their money in order to facilitate large projects, such as the railways. Yeah? So the railways need to be built. These limited companies were created, limited by guarantee. You're limited to the amount of, your exposure is limited by the amount of money that you put in there. So the only thing you'll lose is your 20,000. There's a separation between your personal liability and the money that you put in there. Does that make sense? So that's an important part of this, because now you can invest in many, many things without putting yourself at risk. So that facilitated it, and that currently is the modus operandi for business. Taxation, that obviously forms an important part of it, because you've got wealth distribution. Yeah, so you've got businesses. How much of the UK economy, how much of its GDP is derived from financial services? Of the money that this country makes?
25%.
About 20 to 25%. Can you see why the UK government might want to prop up banks? Another reason why. What's the taxation on an individual, the highest rate of taxation on an individual? Now remember that many bankers get paid very, very well. So what's the highest rate of taxation? 50%. So is there a link here between the industry and the taxation that the government needs in order to fund public services? Of course there is. Yeah. Globalization. Capitalism needs markets. It needs to expand, and there's plenty of places around the world where it's looking to expand to, and it has done over the course of time. You know, I grew up in a time when Eastern Europe was behind a wall. Yeah. That wall's come down, and prosperity. Anybody here from Eastern Europe? Prosperity has entered into the area in the form of capitalism. What actually happened is that what the system we have here has entered into those countries, and you have very rich people and some very, very poor people, and that gap is widening, as it is in most capitalist societies. I'm not a communist, by the way. I'll just make that clear. Okay, the banking system. So rather than look at the bankers, how about the banking system? And what is that banking system? We'll skip this, although it is very interesting, I assure you. Actually, we'll go very quickly, we'll look at this. So it was created to mitigate risk, as I told you, the corporate structure. It's an open investment opportunity, meaning that anybody could invest in these corporate structures. Embody self-interest, so when you put your money in, you get shares in return. You can buy and sell those shares at any time. Okay? And according to Joel Baker, who wrote a book called The Corporation, he considers it a clinically psychopathic legal entity. And it's very interesting the way he's gone about analysing the corporate structure, because he actually went to a clinical psychiatrist and said, right, if you were faced with somebody who had these traits, what would you say they are? And those traits were they're manipulative, grandiose, reckless, remorseless, and superficial. Does that say British Petroleum to anybody? Does it? In the way they handled that crisis in the Gulf? Manipulative, definitely. Grandiose, reckless, remorseless, superficial. And And if any of you want to have a read about that and are interested in it, that's the book that you should look at. Okay, we'll skip that. We'll skip that as well. Okay, banking fundamentals. This is where it gets really exciting. Banks treat money as a commodity to trade with rather than a means of exchange. That makes sense? Yeah? Money initially was invented or was there in order to exchange things of different value. Now money itself is being traded. Okay? Bank executive central function is to increase shareholder value through selling debt whilst earning interest and fees. That simply means an executive in a bank, their job is to sell debt and to get more debt into society. Banks have a license to issue paper money and create debt. So they have a license. If you have a banking license, you have a license to create money. Banks must favour those who provide collateral over those who don't. There's many things wrong with this. I mean, you guys are a typical example of people who are disadvantaged by such a system. Because you know what it is? I firmly believe that creativity and productivity should drive the economy. Yeah? Finance driven by trade, not trade driven by finance. And this is what we have. We have trade driven by finance. How is that the case? Well, who here wants to start a business when they graduate? Thought about it? Now, when you approach the bank for money, they're going to ask you what? What's the first question they're going to ask you?
Do you have assets?
Do you have assets? Okay. If you don't have assets, what's the likelihood that you're going to get hold of that money? It's not likely, is it? Sorry, I didn't catch your name.
Calvin.
Kelvin. Kelvin might have the next big thing. It's likely, isn't it?
Very.
Very. There you go. He might have the next big thing, but you know what? It won't find its way to market. Well, it won't easily find its way to market because he hasn't got any assets to leverage against. That is how finance drives trade, and that's criminal. Really, what should be happening is that Kelvin, they should sit Kelvin down and say, right, who are you? What's your background? What's your track record? Do you have integrity? Are you going to make this happen? What's your team like? Like venture capitalism, but without the sharks and the vultures involved. That way, the bank can understand more about Kelvin and whether or not this thing's going to happen. But we'll talk more about that alternative model in a second. Okay, banking origins. 1600s, where did these banks come from? People used to walk around with lumps of gold, right? Okay, the goldsmiths thought there's a lot of banditry about. We want to protect our gold, so they created these vaults, and they had shelves in the vaults called banks. And they would put their gold in there. Now the people in the village kind of heard about this and said, you know what, that sounds like a good idea to me. Can you look after ours? And so they did that for a fee, which is fair enough. Yeah? After a while, these goldsmiths started to lend out their gold. Yeah? When people put gold into the vaults, they were issued with a receipt. Right? So now people, instead of having gold, they have the receipts which directly corresponded to the value of the gold. Now people in the marketplace started trading with these receipts. So we now have paper-based money. Yeah? Because it was a bit difficult to do that with gold. You know, how do you give the change and all that kind of stuff. What the goldsmith thought is, you know what, we've got all this gold, we start lending out on an interest-bearing basis. So they did that, and then after a while, they thought, you know what, nobody really comes back for their gold here, so why don't we lend out everybody else's as well, without telling them? As long as people pay it back, then everybody's happy. So they started lending out other people's gold. Yeah? Then they thought, you know what, people are still not coming back for their gold, why don't we just make up receipts? This is true. This is modern day banking. We're just going to make up these receipts, and we're going to throw them into society. And as long as people are confident those receipts have value, then people are trading. Now, obviously, they were discovered. The bankers were getting very rich, and the villagers wanted to know why. And so what happened is that they were challenged. Now, does this strike you as fraud? Does this strike you as fraud? Yeah. Unethical? Despicable? But history has an interesting way of changing the perspective or the paradigm. During European colonial times, there was a great need of credit to set sail and liberate and bring commerce and trade to other parts of the world. So the system, instead of being closed down, it was regulated. And that's what we term fractional reserve banking. Fractional reserve. What you have in reserve is a fraction of what you actually can lend out. Does that make sense? Please tell me it makes sense. That's the best I can do. I don't pretend to be neutral on this issue. The negative side is slightly larger, as you notice. We also have the issue of interest. Money being traded as a commodity. I'll tell you something really interesting about interest. It's a system of perpetual debt. The economy we have is a system of perpetual debt. Let's throw it back out to you again. It's time to sharpen up. So you've just got a mortgage for £250,000, okay, to buy yourself a one-bedroom flat somewhere. Now you've actually agreed to pay how much back to the bank for that £250,000? I mean, it's not an exact figure, but 7%. Over the course of 25 years, it might be 500,000. But what's the bank typed into your account, or your solicitor's account? 250,000. So if actually they've created 250,000, but you owe 500,000, there's 250,000 missing in the system. Where does that come from? It has to exist. But how does it exist? Where does it come from? Does everybody understand the question? You owe 500,000 over 25 years. You've been given 250,000. So in installments, you're going to be paying back up until that 25-year point. But there's a gap between what exists and what you owe. How is that gap plugged?
Well, they say it's value for time. But how you value time?
It means more debt. The bank's issuing more debt to cover old debt. And the only thing to stop the system collapsing is the time delay in the payments. Does that make sense? And there's always people falling off the conveyor belts who can't afford it. Yeah? And the government's job is to stop, get to an optimal point where hardly anybody is falling off that conveyor belt, that everybody's able to make those payments back. But you've got a debt balloon, and everybody see that, it's a debt balloon, debt upon debt upon debt. You loan out 250, you need another 250 in the system. You need to loan out that 250, that's going to create another 250 in the system, and so on and so on. Does that sound like something sustainable to you? Of course not. It's boom and bust. Gordon Brown was wrong. He said there's an end to boom and bust economics. And actually, Alan Greenspan, he's a broken man himself. He presided over 20 years of world growth, and then at this moment in time, it's all kind of blown up in his face. And he actually said, the system we have is not perfect. That we have is not perfect, but it's the best we've got. And this will probably happen again. It's optimistic, isn't it? And these are some quotes about interest by some very interesting individuals, former US Presidents Lincoln and Jefferson, who were very much against the concept of private banks loaning out money on the basis of interest. They make very interesting reading. Anybody wants a copy of this, feel free to email me, because we haven't got time to go through it. Actually, you know what? Oops, sorry. There's one here. Yeah, this is President Andrew Jackson to the bankers who approached him in the drawing room of the White House. Gentlemen, I have had men watching you for a long time, and and I'm convinced that you've used the funds of the bank to speculate in the breadstuffs of the country. When you won, you divided the profits amongst you. When you lost, you charged it to the bank. You tell me that if I take the deposits from the banks and annul its charter, I shall ruin 10,000 families. That may be true, gentlemen, but that is your sin. Should I let you go on, you will ruin 50,000 families, and that would be my sin. You are a den of vipers and thieves. I have determined to rout you out, and by the eternal God, I will rout you out. Pretty hard-hitting stuff. And it would be a mistake to consider that as an attack on the individual. It's more on the system. You know what? Let's just come out of that. Again. Okay, is access to capital a fundamental human right? No?
Yes.
So who should receive it? Yes? Who should receive it? Well, you see, the thing is, I mean, it's not like, you put your hand out and somebody gives it to you. There should be a certain criteria to it. But ultimately, there should be an equitable system for all. Maybe the question should be, is equitable access to capital a fundamental human right? I'd say it is. Everybody follow microfinance in Bangladesh and other parts of the world? Bank to the poor, Muhammad Yunus? Yeah. That was one of his principles as well. Although he's run into some problems. Why do governments borrow? You ever thought about that? Why don't they issue their own currency? Why are they at the behest of private institutions that are not democratically elected?
Central banks.
Social banks?
Central banks.
Central banks, yeah, they're privately owned as well.
Yeah. That's the point.
Yeah, so the Bank of England, by the way, is owned privately. It's not government owned. It's not nationalised. Many large organisations, including other banks, as well. It's a bit of an old boys' club. Why create money as debt? Why not create money as equity? Well, not create money. Why not have the concept of money as having equity, not debt value? Perpetual growth versus sustainability. We've already discussed the debt bubble. Should capital be managed by governments or private institutions? Who here thinks that the financial sector can dictate government policy? Who here thinks that's either happened or can happen? Yeah, how do they do that? They obviously don't have, the MP of banking. Well, like any large business, right? They lobby. They lobby and they have a lot of money to lobby. Why do you think that it was legal for people who couldn't afford to pay mortgages to self-certify their income? Was that just one of those things? Or do you think that perhaps banks looked for that to be deregulated, for the responsibility not to be on their shoulders, but to be on individuals? Of course. To give you another example, the UK has to attract a lot of foreign investment. It always has. I mean, I'm from down south in London, and West London, Central London, actually many parts of London are foreign owned. What attracts people to the UK, the UK banking system, and hence creating greater taxation, are the laws, that regulate how much money they can leave with. Now, there was this whole issue of domicile. I won't bore you with it, but the law changed, and these big banks went to the government and said, you know what, we will leave here if you don't allow us to make the money that we want to make. And our clients aren't happy about this either. So when your economy is 20 to 25% based on the financial sector, you're going to listen, aren't you? You're going to feel leaned on. Is the system ethical stroke moral? Ethics? I wouldn't say so. And we all get fed, right? these economies to other economies around the world, we tend to do okay. But is that enough? Okay. I'm supposed to say the first ethical charitable trust opinion. Right, so, conclusion here is the unbridled pursuit of profit, corporations, the unbridled pursuit of profit without much in the way of regulation or stricter regulation, combined with fractional reserve money creation banking, plus money being traded, i.e. interest equals, an unfair and unsustainable economic system. Anybody care to challenge the point? Or is it generally about right? She's somewhere on that scale. So what is the ideal system? It's all very well criticizing, isn't it? How about an alternative? How about we just go back to precious metals? We can all carry around lumps of gold and silver. It's not so good for the fit. It makes a noise as well. Barter system. Hey, you're a surgeon, and I'm the baker. So I'll help you out with your liposuction. You provide me with 6 months of Danish twists. Communism. It's about time we return to communism, isn't it? Who's with me? Comrade. So, perhaps not communism. Interest-free equity finance. What do you mean by that? Government issue asset-backed currency. So the government's now issuing the currency. So, yeah, I suppose it's a little bit about big government. Everything's about small government these days, isn't it? Big society, small government. We need something that works. So the government used to own the railways, telecoms, infrastructure. A lot of that's been privatized now, right? But still the government owns forests, I think, last time I read about it. They changed their minds about selling it off. But you see, these things have value and you can issue currency against those things. Now, people who within the academic sphere, they would argue that let's going back to the bad old days. Because economic growth is driven by the flow of capital, and if you have £1 in the bank and £1 being lent, that's going to stemmy growth. You know, if you have £1 in the bank, then you can print £10, more money to do things with. And the philosophical question is, do we want growth or do we want happiness? That's a whole separate area. There was a discussion on Newsnight recently. There was a venture capitalist on there saying that, you know what the government needs to do? It needs to boost growth. And it can boost growth by doing away with maternity leave. Yeah? Doing away with employment laws. You have certain employment laws which make it difficult for companies to take people on and to fire them when they need to. We need to make businesses work. And if that means people's rights are sidelined in the process, fair enough. And there was another chap on there who was asking, for 50 years we've been going on and on and on about growth, and people are no happier. We need a system that provides people with an opportunity to fulfill their ideals in life, rather than the pursuit of capital. Also, no inflation. Right, when I was studying, I won't tell you what year, when I was studying, I could live on £5 a week. Yeah, now you guys will pay £5 for a bad quality kebab. Yeah? So why is that the case? What's the difference between two £5? Inflation, right? What is inflation? That's not a bad way of putting it. Decrease in the value of money. Because all this created money is entering into the system, so you basically physically got more £5 than you had previously. So if you got more, it's devaluing the ones that already exist. But that's not the way it's in economics. If you study, anybody study economics? Right. So how would they teach you what inflation is?
You've got resources, finite resources, and it's consumption. So your resources are getting smaller and smaller.
Yeah, and they would actually term it the increase in the retail price index, that cost of goods and services going up. Actually, it's more accurate what you said. It's the increase in the money flow in society which decreases the currency. Okay, sustainable growth. So instead of like we have that, we have more of that effect. Yeah, that's the theory. Equitable, opportunity for all. It's got to be the way. Why should there be haves and have-nots to the extent that we have now? You know, we, the citizens, we pay the interest costs of corporations. The tax system's established in order to favour corporations and their. So when a company pays pays interest, it's deductible against their profits. So they don't actually. So that it's actually less of a cost to them, and they pass on any cost of interest to us. So cost of production of something, raw materials, marketing, blah blah blah, and interest. So you've got things, like a can of Coke. It would cost less, but because they're indebted to the banks, they didn't mark it up by the interest that they paid the bank, which means that you actually end up paying the corporation's tax, so the corporation's interest. Do you see that? Interest increase the cost of goods and services, and it's thrown back at us to pay that off. Increase government spend. How much is the UK government spending on interest payments per day? The government's indebted. This university's indebted. Everything you see and touch is debt. So the UK government is paying £120 million a day interest, not capital repayment, just to stay where it is. 120 million a day. So why would it increase government spend? Well, the government would be issuing currency. It wouldn't be indebted, would it? It wouldn't be paying interest in any case. Fair banking. Fair banking. We're not talking about scraps off the king's table. We're talking about a bank that you can approach and have some trust in, that their interests are aligned with your interests. At the moment, we have win-win or win-lose. And the lose is always you. Ta-da! You're wondering halfway through, there's supposed to be some kind of Islamic lecture. All those principles we just spoke about are principles of Islamic finance. So feel good about it. It's one of the few things we can feel good about at the moment. No, it's a real good news story, Islamic finance. None of it can be challenged at all. It's totally universal. And it's something that we should feel really proud and passionate about. Because of all the faith groups, and this is not to criticize faith groups, but of all the faith groups, only the Islamic faith has managed to retain a system where people consider interest and money creation to be outside of the bounds of what is allowed and acceptable. It was the case within Judaism and Christianity, and actually if you look back at some of the sayings of the Greek philosophers as well, you go back, throughout history, money lenders have been the scum of the earth, excuse the expression. But at this moment in time, the only one really flying the flag for these principles, prior to the credit crunch, during the credit crunch, is this industry. Now somebody's going to pipe up and say this industry is just as bad as the rest of them. Well, there are certain products and services that represent Islamic finance which mimic conventional finance. We're not talking about that. We're talking about the general principles here of an equity-based economy. Okay, what is Islamic banking? It's nothing too complicated. Let's say you guys are the investors. You have a central fund, and you have business ventures on the other side. So banks would be staffed by experts in different industries. Yeah? Different industries. So you can I ask what the, Kelvin? Can I ask what the nature of the business is, unless it's too sensitive at this moment?
So retail.
Retail.
Yeah.
Okay, nice and general. Yeah. So they're retail specialists here. Yeah? And so they'll ask Kelvin, okay, what's the nature of your business? Blah, blah, blah. You might have already been successful. Yeah? Kelvin says, I'm looking to raise some further capital here. Okay? So the bank has a whole series of portfolios available from very, very, very low risk to highly volatile. Yeah? And on the right here are some examples. Pharmacy, dental practice, optical centres. On the other side, you've got people who actually put their money in the bank. Now, you normally call that depositors, but we'd actually call them investors. Now, one of the principles of Islamic finance is if you want to make a return on your money, then you need to put it at risk. Risk and return. You don't have to put it at risk. If you don't want to put it at risk, then expect no return. So it will simply sit like safe deposit bonds. Okay? You won't be earning any interest on it. You won't need to earn any interest on it because there will be no inflation. Right? So it'll just sit there. Or you could decide that, you know what, I like some of these portfolios, I'd like a piece of that. At the moment you put your money in the bank, they pay you 2 to 3% interest. The money goes to a corporation or to somebody who already has loads of stuff. They make a whole load of money off the back of your money and created money and pay maybe 6% back to the bank. So the bank pays you 3%, or the 6% keeps 3% for itself. Actually, the margins are normally much larger than that. The bank's in the middle just handling money, whereas in this system, what the bank does with Kelvin is they'd say, you know what, we will take a stake in your business. Yeah, we believe in it to that degree that we will give you the money and we'd agree a stake on it. And a set period of time over which we'll have that stake, after which it can revert back to you. So now the bank's income is centered upon Kelvin being successful. If the business fails, the bank doesn't make any money, nor do the investors who provided the funds in the first place. Is all of this making sense? The investors, let's start again. The investors approach a bank and say, right, I want to invest in one of your low volatility funds. The bank says, okay, here's this particular fund, this group of companies, 1,000 dental practices, will give you 5% a year based upon the profits. Not guaranteed, but based upon the profits, this is what we project that you'll make. The bank has already got these 1,000 dentists and agreed with the bank, agreed with the dentist, that they'll take 10% of their profits. Okay? So now, the dental practices a year down the line make their 10%, make their profits, 10% of which goes to the central fund, 5% of which goes to the investors. Win, win, win. The dental practices collapse because somebody's invented toothpaste that actually works. And so, lose, lose, lose. Everyone see that? In the system at this moment in time, if you have contracted debt, that is what you owe. That is what you are. And look at the time. It's 8. Oh. I'll catch a train at 8:30. Okay. Right, credit crunch definition. A sudden reduction in the availability of commercial credit can be replaced by the exposure of inherent weakness in interest-bearing laissez-faire capitalism through the self-serving actions of corporate financiers put in charge of the world's capital resources. Bit of a mouthful.